The Fed is set to speak tomorrow. Now, they've been in Jackson Hole, Wyoming for the past couple of days, getting ready for Fed Powell's final remarks going into this fall season. What's going on, everybody? Hopefully you're doing absolutely wonderful. I've been missing you from my regulars on the regular videos. You're like, Brian, where are the midweek videos? You've been promising these for a minute, and we are officially back. All right. So a lot of personal stuff on the back end, but all is well. I'm excited to be back with you, teaching, educating, and giving you valuable information. And when it comes to the fundamentals, right? The news, the data, all the stuff that people a lot of times don't focus on, the emotions, and then also, as we know, what's right behind me, the technical analysis. That is where we make the money on the charts with trading day in and day out. And also for my long-term investors that are a little bit skeptical about how the charts can help them, they are a valuable tool about knowing when things are about to pivot, right? So if you're on our Stock Sermon Sunday, this previous Sunday, every single Sunday, we host a live on this YouTube channel where you can come in and ask questions, hear my full analysis for the week, some specific stock picks that are coming up that you should pay attention to. And also we talked about this rotation with money, right? Big tech has been moving, right? The market has been on new all-time highs, and this profit taking for the last couple of days has been scaring a little bit of people, but it could be opportunity for you. All right, that is a mouthful. Let's jump into the video today. I want to go over Jackson Hole, how that should affect for tomorrow's trading day to complete the week. And we're finishing off the month of August crazy next week. So we want to watch out for NVIDIA earnings next week coming up, and also the end of August going into this quote unquote, as we call it, sell-off September or profit-taking September, or whatever you want to call it, is seasonality. All right. So with that being said, let's jump into the news and the fundamentals first about what this is. Okay. Most people are familiar with Jackson Hole, Wyoming. If you're not, okay, it is the skiing capital. It is where the wealthy of the wealthy go to escape. They have homes that are just out of, it's just ridiculous. Okay. I have not been. I'm on the West Coast. I should probably, mosey my way on up there. But it is a special place, beautiful place in Wyoming. And they have this yearly meeting where they are meeting up the Fed and discussing. And here are the remarks. Fed Chair Jerome Powell is set to deliver what almost certainly will be his last keynote address, all right, at one of the most tumultuous times in its history. Amidst several controversies, Powell could use the speech to at least take a side swipe at political distractions, even if he holds past to the practice of not taking direct aim. The speech is billed as an economic outlook and framework review, indicating Powell will take time to provide his views on broad conditions as well as discuss the Fed's policy long-term goals. All right. So as we know, there's been this beef between Fed Powell and also President Trump. And that is why they were addressing those remarks. He could come out and give his view, like realistic viewpoints of how this has been a distraction. We're doing the right thing. Personally, I'm not here to fight with you all, but I think that he has been absolutely amazing during this tumultuous season. I think he's kept a straight head. I believe personally that the Fed should be separate from the White House, and we should be making sound executive decisions based off of rate cuts, pauses, hikes, based off data, not emotions, and what is going to benefit one side or the other. So if you're not too familiar with that, about why personally, holding off on aggressive rate cuts, or yes, he may be a little bit too late. And if he cuts them now too aggressively, it could send us into that same spiral we went to with 2020 and then 2021. Then here comes 2022. And then here comes the inflation in 2023 and so on and so forth. All right. So I don't want to get too deep into that because a lot of folks get very political and whatnot, but all in all, on this channel, I want to simplify the information so you know that simply tomorrow, what he is going to say is going to move the market back and forth. Okay. And when we jump on the charts, I'm going to show you how this is a very pivotal time, because if the market gets a little bit scarce, we have some room to the downside to go. All right. This could be some dip buy opportunities for a lot of you. This could be, hey, I need to mitigate and look at my portfolio to see where I am. So if you bought at the all-time highs, you need to have some stop losses on, things of that nature. And if we run back up to the highs, I personally believe that's going to be another opportunity to short the market right back down for September and October. Okay. So all that said, that is what this event is going to be. Very pivotal for long-term investors and also short-term traders to know that this is going on. My futures traders as well, who don't pay attention to fundamental analysis, okay, this is going to be key. All right. So that is happening tomorrow. Please be mindful of it. And if you don't want to trade tomorrow, that's perfectly fine. Wait for the dust to settle and then come back next week for NVIDIA earnings. All right. Google, we got this going on. Google scores a 6-year Meta cloud deal worth over $10 billion. Okay. So this is an interesting headline from obviously our biggest tech players in the game. Meta has largely been reliant on Amazon AWS for cloud structure through use of Microsoft Azure. So this is going to be interesting that them moving over to Google, and all the companies have been obviously investing heavily into cloud infrastructure. So very interested to see how these two names will be played out. I'll be watching Google heavily tomorrow, as it did close below $200 today, but we still got that price target of potentially 210 plus on Google or in the short term. All right. So I want to see how those react tomorrow. We may gap up on them with this positive news. So we'll see. Okay. So keep an eye on Google and Meta tomorrow. Also Amazon kind of losing or stepping down with that service. Microsoft Azure, kind of seeing what that does. So we watching big tech, obviously QQQ and the NASDAQ. All right. Cool. Well, let's jump in the charts, my favorite place here. And one key thing I want to point out right away, as I always do on my Sunday analysis, I don't want to make this fully long here. I want to come in and give you some quick pointers on what to look for and some levels to watch, as I usually do. All right. So SPY, one thing to pay attention to is on a daily chart, we're sitting right at our daily 20. Okay. If you're not too familiar with the charts, go watch the chart video on my channel. It's how to read a stock chart. Just type it in on the channel. You can get more familiar and be better equipped for these videos. All right. So you see, we're making higher highs, higher lows. There's really no true, like, big, massive trend break just yet. We can maybe consider this a very small trend break right here. Right. But last time we did that, we were able to recover and bounce and continue to new highs. So this is why I was saying with the fundamental analysis, the news, why it's so important is because if Powell comes in and says something more dovish, more bullish, more positive for the market, ending off in good remarks, and the market likes it, then yes, we can bounce from here, reclaim 640 and continue back to the highs of 646. Okay. It would look something like that. That is very much possible. Okay. Now, if the market does not like it, it says, hey, this is that time. Let's go ahead and take our profits. If we continue back below this daily 20, which if I mark it here, the daily 20 is sitting right at, it's that my light blue line, right at roughly 636. Now we know we have some resistance that we broke below, which is this 639. Okay. So that area right there is going to be very pivotal for us to stay below to continue this downtrend. If at any point we reclaim 640, okay, then that is where you want to watch out for hold of 640 and continue higher. All right. So I always give the bullish case first, even though I might have somewhat of a bias to the downside, at least for right now. Okay. Now, if we continue below here, what you're seeing is it's staying below that level. And if we continue to see that, we can start getting a little bit more drastic out of there. Okay. So that's how it would look, is break into a new low below 633. And that's where that selling is going to start coming in. Okay. So want to be mindful of that. As long as we're below 639, that is technically a little bit more of a bearish sentiment. Okay. Looks something like this. And if you look left where I drew that red line, it's right there on that big rejection. And look where we fell to all the way down to 620 pretty quickly. Okay. So watch out for that. And you want to watch out for just taking out a new low. And that's where you can have your trade set, is below that previous day low at 633 and taking out a new low of that previous day before, which was right here. Okay. That is how you would play the downside, is if you get a pop into 639 and this consolidates and maybe breaks up really quick like that, that could be a rejection. Okay. So close to 639, 638 and some change right in this zone right here. You see that rejection right there. Okay. So for my bulls that only see the upside, right? You're getting kind of slammed right now trying to time the bottom. It's very difficult when you have a falling knife. You want to have what we call is a reclaim. Okay. A reclaim is you hold the low that you like, that you're trying to catch a bottom tick on, and you see a big push up like that, and you wait for that pullback, and that would be ideally your entry to go higher. Okay. So watch out for that for my bulls. You need that to continue this push back higher, and you would have a run ideally back into this head and shoulders move right there. Okay. Which will be the neckline of around 642. All right. So I'll be watching those levels to see where we go. Ultimately, I have a bias to the downside going into September. Just don't know where the top is going to be yet. This could be a bear flag. For my structured people, I got too many lines going on here. Okay. I like to keep it simple as possible because I know I got beginners on here. So let me take some of that off. Take some of this off. And I want you to look at this big drop that we had. And we're consolidating into this kind of bearish flag. Okay. Right here. And then if it makes another measured move lower, it would look something like that. Okay. And we do have some gaps to still fill. And the next level will be down to 630. And you see those gaps, these light gray areas that I have, that it's very much possible to start filling that all the way back down like that, just like last time. Okay. So I like this downside a little bit more as long as we're below that 639. Okay. And watch for that break lower in underneath 633.50. All right, there's SPY. QQQ. Tech has been taking some profit taking. Okay. They've been taking some profits off the table. And we have roughly, let's just use this psych level here of, let me turn the moving average on there. Daily 20 sitting right there at 569. Okay. So I like that level 569. And then I like that big rejection there underneath 572. Okay. So light blue line, get under it. For those who have not seen my videos before, here's how it looks. Gets underneath it on a daily time frame, close underneath, and that's where we continue. We don't know how far it's going to continue, but it uses that as a rejection ceiling. Now you see here where it can pop underneath and then reclaim it and get back and ride the wave. Okay. Very similar to what it did here. So we need a solid close below, and I would like to see ideally of 2 days that close below the daily 20 for continuation, continuously putting in new lows, and then that's when we get that big flush like that. Okay. And the flush would probably be back down into 530 on Qs, filling that gap. Okay. But I like it as long as it's below this daily 20 and it holds below it and does not reclaim back underneath, back above 570. We don't get some big spurt back up like this. Then we're good for downside. But if we get that big spurt back up, he says something positive, right? That's where shorts are going to get squeezed out of their position and we're squeezing back to the highs. All right. So I'm prepared for either one, going to be patient for them, but I do like the downside. If we get all the way back up here, I'm looking to slam puts back down for September. Okay. So actually I would like a pop higher so I can get those puts ready for September back down. All right. Cool. IWM. IWM is a little bit more interesting because it is kind of coming into this big push here from that CPI, like rate pauses, saying we're going to have four rate cuts, and all these rate cuts are going to come for the fall time to finish off the year. And that's possible. We don't know. Right. But with inflation data and kind of the Fed minute meetings that they had, the reading, it wasn't very positive. So jobless claims today was a little bit shaky as well. People still filing for unemployment. We know how that is. So I'm looking at IWM. IWM spikes typically on positive rate cut news. So we see this gap up here. I've been really watching that to see if there's some type of news spike or something, and he says something positive about rate cuts coming in, and we start to get a big bullish kind of candle out of that back above, I would say 227. Okay. We could see a squeeze back on IWM back into that 230, 231 gap fill. Okay. So a little bit different look. So watching IWM there, if it continues to stay below this level here, I'm looking at that as a rejection point below 226. All right. Looking at that as a rejection because I thought the gap was going to fill here and it rejected underneath and then, kind of doing a little dance here. All right. I thought this was going to fill. Nope. Lower. Nope. And does it do that? Okay. So we want to be prepared for a little bit lower. A big level on IWM will be back into this 220, 219. And that'll be the first big buyer zone right there, which I like a little bit better. Okay. So if we can fall lower back into there or something like that, or we reclaim, I would just be careful that it's a little bit more selling pressure than we like. And we'll have to see what the market wants to do. Either way, it could be a big move out of it. All right. All right, I'm gonna speed this up, go through some main ones. NVIDIA, okay, it's got earnings coming up, and that NVIDIA trend break was very key. So NVIDIA's gotta come through. All right, that is one big key along with this Jackson Hole. NVIDIA's got earnings on the 27th next week. So it's gotta come through. And you see where this daily 20 is sitting right there at that 178, 179 level and is below it. Now, people are going to buy up the NVIDIA dip, but you got to be careful that was more of a bearish engulfing trend break right there on that candle. Okay. So last time NVIDIA did this, back down, back up, it can do something like that. Okay. So want to be very mindful of that. NVIDIA wants to retest maybe back all the way to this 150 level. Very similar to how a lot of you in this Palantir. Okay. And I'm a Palantir bull. Okay. But you see that 190 to 140 very quickly. All right. These big tech companies can move massively if they cannot hold specific levels. So if NVIDIA breaks a new low underneath 170 again, it's probably going to get going back down into 160. And then we've got some gap fill movement down into the 155, 150 level. Okay. I like the move back closer into picking up the dip on NVIDIA, back closer to 140, back closer to these previous highs. If it can hold that right around that 150. Okay. So that's going to be very key. And roughly, if we look at the daily, I was marking this for my community, this daily 200 level. If that starts to match up right there, and I drew this line that starts to curl up towards that 150 like that, that's where it could meet it. And then we're back up. Okay. To finish off the year. Okay. So NVIDIA, there we go. Be careful. Ideally, risk to reward, in my opinion, right now is a little bit more the downside, but I know a lot of NVIDIA bulls want 200 on it before it falls. You may be able to get the pullback, then 200. I'm not sure. We'll have to see with earnings. Okay. Apple, love this chart. Love this top tick weekly level. All right. Told my community that I was looking at puts on on Apple at 235 with the weakness and this big pop and pull back into that 215 level. All right. Maybe even lower back into some of these gap fills at 212. So 215, 212, very key. Obviously, it's got to get through some more levels, but bigger the push up, the bigger the pullback typically. Okay. So retesting that 212 to 215 level on Apple. All right. It does have little support here, obviously, at that 220 to 225 level. A lot of buyers still sitting right there and right there. So, yeah. But any pop on Apple, in my opinion, is form another top in rejection underneath 230. You can get that lower high. All right. See this curl over? Very similar to Amazon. Look what Amazon did when it was up here at that 235 level. Okay. So it gave a first little signal down that it was a little weak, little pop back up, weakness, 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 flush. Okay. So Amazon did the move already. It's already back to a big retest level at 220. So I want to watch this on Amazon. Let's look at this daily 20 where it is. That daily 20 is very pivotal on identifying weakness or strength. I do have an indicators video here on the channel. So if you want to go watch about the indicators I use, you're more than welcome. But that daily 20 and then typically that daily 200 I watch for personally. I don't like to keep too many things on my chart, but daily 200 right there, bigger move. And then daily 20 would be, hey, this is very important for the continued strength. It kind of rides it like a wave, as you see. Rides it like a wave, still bullish, still bullish. Nope, break down below. Okay, it needs to get back above, or else it's going to keep falling and use it kind of like it's pressing down on it. All right, the wave is essentially engulfing you. All right. Speed this up, speed this up. Google, I love this candle on Google. I had 49%, beautiful trade on Google. I think Google, like people, like this was a sleeper, right? But it's now time for it to maybe cool off unless, the news is positive and we continue higher. But I love this kind of 4-hour candle and daily candle on Google right now, which is giving a lot of top heaviness. Okay. This used to be a green candle. Okay. Popped up, used to be a green candle, and then sold right back down off of that 202 level. Right. So that means sellers are very much present up in this 202 level, and Google closed below 200. So it's got to get back above that 200 and then get back above and take out 203. All right. If not, Google's going to try to pull back into this 195 area and potentially even further down through some of these gap fills that it just kept gapping up, gapping up, gapping up, gapping up. And now, like I said, when it rides a wave that long, you typically get staircase up, elevator, back down very quickly. Okay. So watch for Google at 190 as the big pivot level there. But if it gets going below there pretty aggressively, I do think it's going to just absolutely smash through some of these levels, but it's going to need a catalyst. And we know we just got those positive news from Google. So I want to be aware that they do have a positive catalyst of news right now. Okay. But very heavy up here. Please be mindful. Again, pop lower, push back up in that level, another reject. And it looks like that 202 is very heavy. Okay. 202 is very heavy. All right. Amazon, I just don't know if I want to take calls on anything, with the weakness on the market right now. So Amazon, I want to mark that level right there, 225, which is the daily 20 right there. And Amazon could get going for the fall time frame back to retest this low of 212. Okay, 210, 212. So if Amazon stays below that 225, then we've got more selling to come. And underneath 220, it's going to start drastically getting down like it did last time into this 210 level. Okay. So I'm looking at bigger plays. And what I would want from some of these is I would want a pop higher. I do not want to ideally chase lower. That's where a lot of people get, faked out or trapped, so to speak. If you've heard of those traps, they chase down here for puts or sells in futures and then get slammed right back up. Okay. So what I would like to see on Amazon to catch it, if it does present, is fill that gap, right? Show me a little resistance like that, and then I can take it lower. Okay. Cool. If it reclaims back above that 226 level, very similar to here. See how it pushes up in there, reject. All right. So we'll see. We shall see. All right. A couple other ones that I want to quickly cover. Palantir is a little bit oversold, but now is back below this 160 level. So it can continue lower unless it reclaims back above 160 and we start mounting back above that level again. Right. That was a heavy resistance. It is now resistance again. So this is more of a bearish flag on Palantir if it stays below that 160. Okay. And it typically rotates right back down to the lows. Okay. All righty. Hood, I really like. I got a community member, shout out to Dreama, who's been absolutely just killing Hood on her trades. And I had to partake a little bit today. So Hood into this daily 20 level here. I love when I see something reacting off of that daily 20. It's close enough to it. if it continues to reject that 108 and underneath 110 level, right, I'm going to look for some puts on Hood for this kind of trend break here. And Hood's been making some massive moves, obviously to the upside, but now it has the possibility to retrace and make some decent moves back to the downside. So all this is profit taking, and I'm looking for it to do something like that. Okay. I called this Hood one right here and absolutely missed the trade. Dreama called it in our community, but that double top, absolutely beautiful. Went from 117 to $100 in 2 days. All right. So I'm looking for this to continue and kind of retest this level again. You see this rejection right here, big rejection, and then it continues down into that 95 to 100 level. All right. So kind of looking for the same idea. Top watch on the Hood. I like where it's sitting at that daily 20. SoFi looks very similar to Hood. I would keep an eye on it. I know a lot of you guys and ladies are SoFi shareholders below $10. If you did, if you know, you know, right? But this big rejection looks exactly like Hood. Do you see that big rejection back down, trying to retest back up? And, you know, if you're not comfortable with trading the downside, I definitely understand. It is above the daily 20, so I'd probably be a little bit more patient with it. But if it falls back below 2250, right, we've got some gaps below, and it could start doing something like that, right? And that would just be profit taking, right? And then you would catch it again at $18 to $20. Okay. So watch out for a pullback on SoFi potentially if we see another rejection underneath that $25. Okay. All the white here, healthcare. I would look at Kava for long-term leaps shares. That is one that is in a buy zone down here around $60 to $65. I would look at Kava for leaps and shares at this level. I like HIMS at this level as well. I'd like it to fall a little bit lower if possible, down into kind of like the mid 30s, but HIMS is at a buy zone right now at $40. Last time it was at 40, went all the way back up to 70. So watch HIMS. It's also sitting right at that daily 200. Merck's been making a move as well off of this level in healthcare. Okay, so if Merck mounts above that 88 level, which is that daily 200, it already got above the daily 20. If it gets above that, we're going to start seeing a move back closer to $100 on Merck. It's got earnings coming up at the end of, October. Lululemon, another buying opportunity. UPS, I'll be patient on that. I don't like that rejection at that daily 20 coming underneath it, so I'm going to be patient on UPS. I have shares in CNC. So CNC, big gap fill here. They had good earnings. Their CEO was good. I'm looking for a price target of $60 on CNC, still in a buy zone. If you can see right here on a monthly time frame. Last time it was at this area at $26 to $30. It went all the way back up to 75. Okay. So watching out for that. But Novo, that is making a nice monthly move off of there, continuously mounting up higher and higher and higher. So Novo, same thing as CNC, very good there. All right. For my AMD folks, AMD pulling back into a very key pivotal area here at 157 to 160. So if AMD needs NVIDIA to pull through, if it holds this, we're sitting in support. It could retrace back up to that 175, 180 level. There is a gap back up there to that level. So please be mindful that the daily 20 on this is all the way back up here. Okay, so if it wants to retest it, your target is 172 to 175 on AMD, and it's going to need some help from NVIDIA. So do not short AMD unless we break a new low underneath this 157. It could mount, sit here for a while, and then spurt back up into that level. Okay, we need confirmation though. I've been loving MU lately on trading it. I wanted to top ticket. We traded it well on the upside and on the downside. If it can pop back up higher, I do like that. Long-term MU, I like. But right now, it's pulling back. So this is a nice double top. If it can spurt up a little bit higher, fill that gap right into that daily 20 roughly, looking to short it right back down. Final target closer to $100 on MU, potentially maybe even lower if it gets weaker, but $100 first target there. on MU on the pullback. All right. This has been pretty long. I can feel it. Thank y'all so much, as per usual, for tapping in with me for these midweek or end of the week videos in between our stock sermon Sundays. If you click the links down below, you can get some free shares from Robinhood, Webull. Appreciate all the love on the Robinhood videos. We'll be creating some more educational videos on here. And, love the stop loss videos, things of that nature. So if there's anything that you'd like to see below, let me know, and we'll go from there. If you want to join Leverage University, that is where we are live trading and sharing information about where specifically we're buying and levels. And it's more than that. It's also an entrepreneurial group. So if you have any other entrepreneurial ventures, you're more than welcome to tap in there. So our trading floor, we have our shares and leaps, CNC, Merck, Kava, and then our day trade signals, where I do give the charts more specifically. There's our trade that I took today on Google, shorting Google, and right at that 202 level. Okay. So I always post a chart. And we have our wins in here. Shout out to everyone. There's Dreama with her 64%. Shout out James for a big trade there on TQQQ, 100%. David took our INTC put at 100% on his money. Dreama, there's another 170%. I took HD puts for earnings for 50%. Right. So it just keeps going and going and going and going. Yes, we do take our losses periodically, but my entries are usually pretty good. So if we have to stop out, I'm typically stopping out between 10, 15, max 20%. So if you want to learn, if you're that type of person, want to understand how to take your own trades, we'd love to have you inside. Peace, love, and blessings. Till next time, I'll see y'all on Stock Sermon Sundays. Bye-bye.